Hello. I get a lot of questions on the accountable plan, so I thought I would just put together this video so that I won't have to repeat it over and over. Um, Forgive me if this is not great quality. I don't really do videos. This is like my first one to explain a topic, and I don't have the right equipment to either. So I'm hoping you're going to hear me correctly with this this iPhone headphone. So anyway, I wanted to explain the accountable plan. And if you remember working for corporate America, whenever you travel or and get into any expense for your company, you have to fill out an expense report. And then you submit it, and to be accountable for the expenses if you expect reimbursement. This is the same thing in your S Corp. You're going to have a smaller policy in place, which we're going to call the accountable plan. You're going to submit a reimbursement form, and you're going to have the proper expenses, receipts behind that to substantiate the expenses, because you're accountable, and that's how you're going to get reimbursed. Okay. So in corporate America, right, when you submit that, the AP department sets you up as a vendor. You submit the report, they book it in expense, the right category, depending on their chart of accounts, and then reimburse you direct deposit, right? So credit cash. So that's how you're going to do that. Now, before I get started, I like to share where I got my information from so that you don't feel like I pulled it out of thin air. And I also to give credit to the professionals where I learned this. Now, a lot of you know when I post stuff, I love Murray Bradford, right? W. Murray Bradford. I know it's backwards. The recording doesn't show properly, but I want to show you from his book, because that's where I learned the accountable plan. But then I still, search to hear other professionals explain it, because sometimes it just clicks when you hear it different ways and see different illustrations. And I came across this accountant, Amy Northard, and she has free downloads on her page, and I can share that with you. That's where I like her templates, actually better than the ones that Bradford provided. But, whatever, you can, create them to the way that you see it and it works for you. The first thing I want to do is share something out of Bradford's book. It's this here. This is section 11. And I'm going to focus a little bit on the home office, because that's what really stirred this up. Now, I also believe with Murray Bradford that home office is not necessarily a red flag for audit. But a lot of people are like, ooh, they're scared about putting a home office. But the thing is, with the home office, if you choose to do it this way and you're an S Corp, and don't be a corporation just to have a home office, but when you have an S Corp, you will do that reimbursement scenario that I talked about on the expense report. And then when you submit it, it doesn't appear on the corporation's tax return, the 1120S, as home office, right? It'll say something like office expense. That's where you're going to categorize it. And it doesn't show on your 1040 like you took a home office deduction. So that's a good way of, like, if people are really paranoid, according to what Murray says people believe. And that's in his book. Okay. So I just wanted to show you that out of his book. I'm going to share Amy's site so that you could see what that looks like, because I really like her stuff. And this is a good site for you. It breaks it down in plain English. Hopefully you're seeing it. Amy Northard, CPA, the accountants for creatives, how to deduct a home office as an S Corp. And then you can read all the details. You must have an accountable plan. You calculate the percentage of your home, blah, blah, blah. What's that? That's Form 8829. That's how you're going to create it. And that's going to show you what can be reimbursed for home office. As an employee of the S Corp, you must prepare an expense report, and then you reimburse it, right? And then you enter the payment into your S Corp's records, just as I explained before how they do it in corporate America. So that's that one. So let's show you the example. Now, I got her example of an accountable plan from her site, and it's right there. See, agreement to adopt an accountable plan. So this is like what corporate America has as a travel and expense policy. Same thing. You're just telling it the company blank, right? You're going to put the company name there, desires to establish an expense reimbursement policy pursuant to blah, 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 tax code, right? Except as otherwise noted. Now you can have some exceptions, like this one's a contractor, this is this, and this is why they're not included in it. But you're going to have specific policy. We don't care about that. We care about who can do it, right? Because we want to get the reimbursement. So under no circumstances will this company reimburse employees for business or professional expenses incurred on behalf of the company that are not properly substantiated. So the expense report is just one piece of it. After you list all the expenses, you have to have what? Receipts, because you have to substantiate and be accountable for these expenses. For the home office, that receipt is the Form 8829. So what do you have? You have the accountable plan, you have the reimbursement form, you have receipts for certain expenses, and you have the Form 8829. Now, there's another piece in there that I think is very important that Bradford mentions. He says, according to his guidance, and this is a letter if you can see it, right? I don't know where I got this format from, probably searched a template for a letterhead or whatever. But the letter is from the officer of the company, which is probably, in some cases going to be the same person. The president of the company is also an employee. So it's going to be like John Smith, the president, to John Smith, the employee, and any other employee within the company. The company desires your services at times to be in the late evening and requires you to maintain an administrative office for the convenience of the company. In Murray Bradford's advice, he's saying you have to have a letter where the company requires you to have a home office. You can't just work at home just because you feel like it. Your company has to allow you and expect you to do it, and will reimburse you for utilities and the space or whatever, the depreciation, all that kind of stuff. That's going to be substantiated by the 8829. Now, this letter I created based on the guidance in the book. So this letter didn't exist. I just made it up. And this is for one of my clients who is a grant writer. She's an S Corp and she works at home. That's her home office. And she works on different projects. So I put stuff like, you protect the confidentiality of your client projects. Your work at the office focuses on acquiring new clients and the ability to facilitate uninterrupted attention to business plans and bookkeeping. So those what I thought. And I discussed this with her and she told me, this is what I do in my business. And I said, okay, I want you to do it at home. This is your home office. And I want you to this is an explanation as to why you need to work at home. And when you do it in the evening, you have to be safe. So you're not going to run out to an office that the company provides for you. Because let's say you have more than one office. You don't want to be at 8 o'clock at night traveling home 9, 10, 11, and you have things to do. So that's the purpose of this letter. And this helps. Now this whole thing ends up being a very nice package that's audit proof, because you're running this place like a business. Who would go to all this trouble if you weren't running a business, right? And this is the correct way to do it. And that's it in a nutshell, really. I wanted to show you the examples of, I like Amy's expense reimbursement form. She has the home office, the mileage, any other out-of-pocket like airfare, lodging, all these things, and then she has cell phone and internet. And they're going to total up, and at the end, the pink cells, that is what is going to be reimbursed to you from the company. I like this one. Murray Bradford has a couple of others. He has this one, but of course it's for paid subscribers to have permission to use this, which I am. And I'm just, using it to show you, to teach you. But employee requests for reimbursement of Section 179. So you can actually do the Section 179 bonus depreciation with this form. And there's also the home office. It's the same thing like what Amy has. It's just broken down a little bit differently. And at the end of the day, that's the reimbursement for the home office. Now, the trick is, if you can see this, hopefully it'll share. This Form 8829 I created for this John Smith or whatever. Well, this was really my client, and I just changed the name and the social security number. But basically, I tricked ProSeries. I put the information as the S Corp would as a Schedule C, so that it would create the 8829 for me, and I wouldn't have to do the math. Math is hard. Anyway, I didn't want to do the work, but I wanted it to create an asset entry schedule, and then the depreciation and amortization schedule, and then the 8829. This is required with the reimbursement form. This is your backup, as if you rented a car and then Avis gives you a receipt. Well, this 8829 is the receipt, if you will, or the backup, the substantiation for the reimbursement of the home office. And that is everything. So let's recap. We have an accountable plan. We have the letter from the company's officer to the employee, every employee, that I need you to have a home office, whoever you need to have a home office, and that you're going to reimburse them, right, for said work. And then you have the 8829 doing the calculation. Then you have to do an expense reimbursement form. And some people do it quarterly. You know, you can do it at the end of the year, whatever, you know, you establish. And guess what? This reimbursement has to be done timely. What does that mean? Well, the IRS says within 60 days, they want this turning around. Otherwise, it's out there too long, like compensation. Meaning, if you get an advance, let's say, you have to account for that money and turn it back around with expenses. If you spend money on behalf of the company, you have to turn that around fairly quickly and get reimbursed. That's why there's timing on those things. Okay, and then the reimbursement, and then you get your money from the company. Separate bank accounts, of course, from the company bank account into the employee's bank account. And that, my friends, is an accountable plan. It took a while to get there, but I think I figured it out. And hopefully that was clear. If not, please PM me, no problem. And I'm happy to share. Thank you.